My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll do it, my friends. I'm just trying to make a little money. My job is not just to entertain you, but to educate and teach you. So call me, 1-800-743-CNBC. Tweet me, Jim Cramer. For years, hardly anybody knew Jensen Huang's name. The CEO of Nvidia was seen as someone who made the best chips for video games, if he was seen at all. If you spent thousands of bucks on a souped-up gaming PC, you might have heard of him. If you asked your German car dealer what made their car so superior, she might mention Nvidia, which is how I found out about it a dozen-odd years ago, when the head of Audi North America tipped me off about Nvidia's non-gaming greatness. But on a day where the NASDAQ exploded higher, surging 1.96%, as the Dow gained 96 points and the S&P rallied 1.18%, we have to think about what this man means to the market, because I can't remember another executive who had this much influence over U.S. stocks. It's a fitting tribute given today Nvidia's market cap exceeded Apple's, finishing just north of the Cupertino giant, $3.012 trillion for Nvidia, $3.003 for Apple. Sure, we've had some huge winners in our time, right? Steve Jobs, the iPhone, Bill Gates, Windows, Jeff Bezos, Amazon, Mark Zuckerberg, Facebook, now Meta. Those are individuals who personally changed the world. They're amazing men. But nothing like Jensen. Nothing at all. How has the CEO of Nvidia made a bigger splash than even Steve Jobs or Bill Gates? Look, Jensen is an American original. Immigrant, young genius, worked his way up the Denny's ladder to dishwasher. Gets degrees, starts company, almost fails, stands up to Intel, dismissed by Andy Grove. Even as people at the highest level at that company said Jensen's lightning-fast chips were the way to go. Now Nvidia has $3 trillion market cap, and Intel's worth a cool $131 billion. His chips have started nothing short of an industrial revolution. But let's cut to the chase. Nvidia got to more than $3 trillion because Jensen's been working on his game plan for decades. Nobody seemed to listen until ChatGPT exploded on the scene in November of 2022, and the world woke up to the power of generative AI. I had the privilege of seeing Jensen's ideas at work years ago, so I knew that he had it in him to do anything, come up with anything, visualize anything, execute anything. I have been in awe of this man for ages, not just because he's a visionary business person, but because he happens to also be a really nice guy. Okay, what the heck does nice have anything to do with it? Well, Jensen's a lover, not a fighter, and I preach his gospel now that I've mellowed with age. I'm turning into Jimmy Chill, I know that. I went to TJX today to get this leather jacket, and a man stopped me. His name was Jeremy from New Hampshire, financial planner. His wife was there, too, because of you. She says to me this, get close, we get close. She says, I retired because of you. Jeremy whipped out his phone, showed me his position. He said he had bought 2,000 shares of Nvidia because I couldn't stop raving about it, about the time when I named my dog Nvidia. And now they are wealthy beyond their dreams. He said, thank you. I said, thank Jensen Huang. Which brings me to today. If you made money in the market today, you probably have Jensen Huang and Nvidia to thank for it. See, ever since Dell reported a disappointing quarter late last week, Wall Street became convinced that they were signaling a slowdown in the data center, maybe even a slowdown in Nvidia. Now, that would be a devastating development because we currently have an arms race going. It's an arms race among Google, Microsoft, Amazon, Meta, and Oracle to build as many of these $6 billion structures as possible. These companies are the equivalent of nation states. They can easily spend fortunes building new data centers, much of which goes to Nvidia, because they make the chips that can handle accelerated computing and generative AI. That's them. That's what they do. Last week, Dell pulled the rug out from under the whole complex with what was thought to be an uncertain view. But last night, Dell competitor Hewlett-Packard Enterprise reported a fantastic quarter. They made it clear that the data center build-out is on fire, nowhere near completion. After reading the conference call, I thought that they were in the early innings of the build. Yes, early innings of generative AI. And the equipment we need to make it work. Geez, maybe they're in the first inning, for heaven's sake. And you know why? Nvidia, that's why. The roadmap for Nvidia chips, the latest Blackwell model, and the one now called, coming after Vera Rubin, after Philadelphia astronomer, believe me, I checked genealogy, not related, It's just going to get more and more potent and powerful. That means more and more data centers. Hewlett-Packard Enterprises doesn't hide its sponsorship. The company mentioned Nvidia 10 times on the call. Always about being aligned with Jensen. Getting it right with Jensen, I call it. HPE is right with Jensen. Once HPE clarified things, a huge number of stocks were off to the races. Of course, all the hyperscalers, but also every piece that goes into a data center. Everything from Eaton to Supermicro, Micron, Broadcom, Taiwan Semi. But so did Constellation Energy, Vistra, NRG. Yes, the cleaner utilities with spare power, because these data centers consume electricity like crazy. ARM Holdings tore higher. Semiconductor capital equipment plays, KLA, Applied Materials, Lam Research soared too, aided by an upgrade from sell to hold for the first two. It's a humbling towel throw from a bearish analyst. Now, I have rarely, if ever, seen the kind of pin action like we're getting through here. CrowdStrike reported last night. Okay, great quarter. On tonight, we got 4 Nvidia mentions and 1 Jensen call out on that cybersecurity conference call. ServiceNow stock seems to be finally catching up with the fundamentals, and you better believe that's partially driven by the company's closest with Jensen Huang. That stock could rally 50 points in a heartbeat. Maybe even just some film of them together. We have Snowflake tonight. Okay, on Monday, they announced an important partnership with Nvidia for customized AI applications for their customers. Jensen joined him virtually for the news. Virtually. Maybe good enough. Last night, Cisco talked about how Jensen picked Cisco to be his Ethernet partner and how it could be huge for numbers next year. And look, I didn't handpick all these different companies. They're just because they're connected to Nvidia. It was pretty much random. Oh, and you know this fight about how Elon Musk may have ordered 500 million Nvidia H100 GPUs for Tesla, only to ship them to a social media company and his AI company? Well, Musk confirmed the story and said, quote, Tesla had no place to send the Nvidia chips to turn them on. So they would have just sat in a warehouse, end quote. That makes sense. See, given how few chips Nvidia's foundry, Taiwan Semi, can manufacture every single day versus the demand, Jensen doesn't want anyone's stockpile and wants them to be put to work. He particularly cares about sovereign AI, and he cares about healthcare AI. Now, I know that Nvidia stock accounts for 1/3 of the S&P 500's rally this year, so it's easy to say it has outside influence. But as a former decent bowler before I hurt my elbow, I'll tell you that I've never ever seen anything like this. Every time Nvidia hits the head pin, it's strike after strike after strike. And this is no joke. When a Blackwell-led computer has fully ingested all the Professional Bowlers Association data, they can build a robot that will only bowl strikes. Beware, it's coming. 300, 300, 300, 300. Again, there's a reason I renamed not one Nvidia, but 2 Nvidia dogs, hoping that people like Jeremy outside would buy 2,000 shares and make $2 million. Box checked. I'm grateful that Jensen lets me celebrate the pretender Nvidia Raghu Cramer, but what you need to know is that this man has a plan that is as galactic as Vera Rubin might envision. Go Google her, it's pretty amazing. That said, I know what Jensen wants to hear. Graciousness. So I'm paying homage the way really, the best way I know how, okay? Imitation. You know what that is. That is the highest form of flattery. And by the way, this is not from TGX. This happens to be borrowed. Although I love my TGX. It's really good. The stock was at 107 today. You hit that move? As he put it when I interviewed him in March, he might regard this, putting on this jacket, as super funny. Laughing on the inside. Bottom line, thank you, Jensen, for changing the world. And for you skeptics, take a look at today's biggest gainers. They're all they're just spinning pins, scattered this way and that. Because Nvidia's speedball went right down the middle. Strike. How about we go to Fred in Oklahoma? Fred.
Hey, Jim.
Fred,
I
what's
had
up?
just acquired my target number of shares of Celsius Holdings, and then the price dropped about 12%. So do I get more of it, hold what I got? Or
I like Celsius. I think that there was some problem with the Pepsi distribution that did not make sense to me. We didn't get downgrades. I frankly still don't understand exactly what happened, but I think that Celsius is a good hold right here. Let's go to Lance in Maryland. Lance.
Booyah, Mr. Cramer. I'm a first-time caller, a happy club member, and I want to thank you for being the people's champion of investing.
Well, I sure try, and I got to tell that club member, Jeremy, and you, thank you so much for listening, because we pull our heart. Jeff Marks is getting recognized on the street all the time, as he should, because he is the heart and soul of the club. Let's go to work.
My question, this stock has a 3.8% dividend, but has quickly lost over a quarter of its value. My fortitude is shaken. Is CVS a hold, buy more, sell? Thank you.
I am very concerned about CVS. The reason I'm very concerned about CVS is I spend enough time with Amazon for me to believe that when they do same day, like when I get home, I know the Zyrtek's going to be there. I ordered the Zyrtek at 4 a.m. You think the Zyrtek's going to be there? Of course the Zyrtek will be there. That is so much faster than going to CVS, which is actually 2 blocks from me. And that's what's happened in all of America. All right, look, I want to thank Jensen for changing the world as we know it. Put together that team at Denny's and stuff. He and I, we both talked because we were both dishwashers, and then I got promoted to busboy. And for all the skeptics out there, just take a look at today's biggest winners. See how Nvidia is influencing almost every one of them, and of course this market. On Mad Money tonight, I'm going off the charts on copper to see if this mined metal could be maybe giving us some signals on where the market is headed next. Then what is CrowdStrike cooking up after a strong report last night? I'm breaking down the numbers see where the cybersecurity standout stands. And could Snowflake's new partnership to be with, Nvidia, a catalyst for comeback? I've got the software company's top brass fresh off of today's Snowflake Summit. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
In a market where we're constantly trying to get a read on the state of the economy, if only so we can figure out when the Fed might be able to cut rates. Everybody's tracking all sorts of indicators, inflation numbers, job numbers, jolts, the purchasing managers index. I could go on and on. But sometimes it pays to listen directly to the commodities market itself, because certain commodities give you a tremendous amount of insight into where the global economy is headed. That's why tonight we're going off the charts with our resident commodities expert, Carly Garner. She's a brilliant technician who's the co-founder of DeCarly Trading and author of Higher Probability Commodity Trading. Last year, she nailed both the top in oil and the bottom, too. Rather than focusing solely on government statistics, I went right to her. I wanted to consult directly about the price of copper, or Dr. Copper, as we used to call it back in my old hedge fund days, because it was widely regarded as a great bellwether for the economy because there was so much copper used in a house. Of course, some of that reputation was overblown. Garner points out that everybody loves to point to copper prices when they're looking bullish. But whenever the price of copper tanks, what do? We tend to shrug it off as an obsolete indicator. After all, we're a service economy now. Who cares about this industrial metal? Over time, copper has proven to be an okay predictor of the broader economy. Not great, but definitively meaningful enough to be worth our attention. As Garner sees it, the copper market can and does talk to us, as long as we're willing to take the time and listen. I would say as long as we can get her translation, recognizing that stocks tend to lag the price of copper. And that's why she's worried about the abrupt reversal in copper just over the last couple of weeks. This decline could be bad news for the averages. Remember, there was a lot of talk about supercycle copper just 2 weeks ago? All right, before diving into the weekly chart, let's look at the 50-year. She typically doesn't go that far. 1972, President Nixon. The 50-year history of copper prices, because you need to understand why we were talking about this metal in the first place. Before the turn of the millennium, copper mostly hovered between 50 cents and $1.50. Garner says the pivot line created by copper's 2000, right here, the pre-2000 trading range has stood the test of time, becoming the metal's new floor of support. Aside from a minor blip during the financial crisis, and here you see that this was actually pretty amazing. I call it kind of a major blip. Copper is held firmly above this key line, and looking at the pivot line, it currently comes in at just over $2. As Garner sees it, $2 and change is as low as copper can reasonably go. Well, she doesn't expect that to be a realistic downside target, given that it's currently at $4.63. It's much higher. We haven't even tested that floor of support since the COVID low 4 years ago, when copper briefly dipped to $2.07 before quickly bouncing back. And I can tell you that this was a blink of an eye when it went down there. Never forget that commodities don't trade like stocks. Most of the time, they pretty much trade sideways, with occasional extreme moves higher or lower. You almost never see a commodity grinding steadily in one direction over time. They're all roller coasters. Okay? Now, on the upside, Garner notes that copper's historical trend line is near $5.35, just slightly above the $5.20 high it achieved in late May. This trend line began in 2007 before the financial crisis, and it managed to keep a lid on prices ever since. We came close to that level last month, and while Garner acknowledges the possibility of a last hurrah rally to test this ceiling of resistance, I love that, she suspects that copper's likely already peaked. Again, when you look at the last 50 years of trading here, you can see that copper, $5 copper, is incredibly expensive. And anytime the price has gotten anywhere close to that level, well, it's always come right back down. You can see floor, it just, well, this was a breakout, but it just never gets anywhere near it. Now, I want to do this. I want to zoom in on the weekly chart of copper. Again, don't forget that copper tends to be a leading indicator for the stock market. It's often a few steps ahead. Garner notes that historically, copper tends to make significant highs or lows a handful of months before the stock market does. While it's a leading indicator, it does have a substantial lag. For example, look at what happened in May of 2021, okay? Copper futures soared before peaking around 490. 490s, here we are, $5 again, right? About 7 months later, the stock market rolled over, okay, and that was because the Federal Reserve declared war on inflation. Stocks spent the bulk of 2022 headed lower. Garner now suspects that last month's reversal might be a repeat performance, with copper surging to new highs and then rapidly breaking down. I did not want to hear this, but this is what the charts are saying. If that's really the case, then she'd expect copper prices to initially retreat to $4 to $4.10, okay? But if stocks follow in the metal's footsteps in a few months, she believes the pullback in copper could resume, taking the price down to the floor of support represented by the trend line. And that's at $3. I mean, we're talking about a substantial decline. If the selling gets out of hand, Garner warns that 350 would be in play. Historically, 350 level has been pivotal for copper. Prices tend to behave bullishly above that level and bearish below that level. So we're going to hold 380, okay, as we get closer to $3, and then we'll hold here. And then, who knows, okay? Meanwhile, when you look at the relative strength index, or RSI, down at the bottom of the chart, an important momentum indicator, it also paints a bearish picture. Garner points out that the RSI moved violently into overbought territory late last month, and has since rolled over, okay? But even after this decline, it's still much closer to being overbought than oversold, so it's too close to the red line. Further, she thinks the 200-week moving average will act as a price magnet for copper, and it's currently near $4, down about 13% from where the metal's currently trading. On top of the chart issues, Garner warns that traders are poorly positioned for this breakdown in copper. So take a look at this. I want you to check out the weekly chart paired with the CFTC's weekly commitments of traders, or COT report, okay? And we talk about that a lot. We love this data because it shows you how different groups of futures traders are positioned in any given commodity. You've got small speculators, meaning home gamers, larger speculators, meaning money managers, and commercial hedgers, meaning companies that actually deal in copper, the physical metal. What Garner cares about are the large speculators and money managers. They really set the tone. According to the CFTC report, large speculators are currently net long over 70,000 futures contracts. See that? In the past, Garner points out that when the group held such an aggressively bullish position, copper prices typically were about to peak. What makes things tougher for copper is the fact that as prices come down, these bullish traders are likely to dump their positions once because they can't take the pain, leading to yet another leg lower. Kind of just, it's a waterfall. At the end of the day, there are plenty of fundamental reasons to like copper. We desperately need this stuff for all sorts of emerging technology and green energy, including electric vehicle batteries. You need plenty of copper to build a data center. What we said at the top of the show, we still have a voracious appetite for those warehouses full of servers. But the bottom line, the charts and the history, as interpreted by Garner, suggests that all the good news has probably been priced in, and copper's headed lower, possibly much lower, if Dr. Copper's diagnosing a major economic slowdown. Let's take some calls. Why don't we start with John in Michigan? John.
Hey, Jim, I really appreciate your show.
Oh, thanks, John.
I'm very bullish on silver, and I was thinking of Hecla Mining, and I wanted to know if you knew a better miner.
Well, I have to tell you, I'm not that keen on silver myself because I don't want the industrial aspects of it. But I do think that I used to like, it's been a long time since I've looked this candidly. I used to like Pan American Silver because they had the lowest costs. But Hecla will do fine. It's not great, it's not bad, but it will get the job done for what you want, which is exposure to silver. Now let's go to Randy in Pennsylvania. Randy.
Jim, booyah. Nice to be on your show again. Fly, Eagles, fly. Jim, let's go to Brazil in your private jet to see the Eagles win their first game.
No private jet, but you know what? If the Eagles are going to win the first game on Mars, then you got to put me right down in Jensen's spaceship. What's up?
There we go. Question for you about gold, glorious gold.
Yes.
Now, as you know, with the world and the U.S. economies are uncertain, how much do you like gold and/or gold future stocks?
Oh, look, I happen to like the gold, the GLD. I like that the most because the commodity costs have just gotten so high to bring gold out of the ground that I prefer the ETF. I think that's the best place to be, and that's where I think you should go. Right? The chart suggests that even though there's reasons to be like copper, all the good news may have been priced in, and Carly Garner says it's headed lower, even though we hear many people say it's a super cycle. Doesn't sound like she thinks that. Their money's back after the break.
Coming up, the cyber stock that made the crowd go wild. Cramer takes a hard look at a soaring software play. Next.
Look at this incredible run. The stock of CrowdStrike, Cramer fave cybersecurity company, reported a tremendous quarter last night, sending the stock up 12% today. These guys have a long history of blowing away the estimates. They did it again. CrowdStrike delivered a big top and bottom line beat, with management raising the full-year forecast across the board. They've had a lot of success getting customers to consolidate on their platform, rather than going elsewhere for part of their protection from different organizations. At this point, the stock's now up 34% for the year, although it's still down roughly 6% from its highs in March, so could have more room to run. Let's check in with George Kurtz. He's the co-founder, president, and CEO of CrowdStrike. Get a better sense of the quarter. Mr. Kurtz, welcome back, and congratulations on a great set of numbers.
Great to be here, Jim. You know, we're so excited with the quarter and the numbers that we posted. $3.65 billion in annual recurring revenue, 33% revenue growth, free cash flow 35%. With a rule of 68, well above the benchmark rule of 40. So overall, great quarter.
It's funny that you mentioned that because I happen to have open for my questioning a chart in your deck called Growth at Scale. And because of the law of large numbers, we typically don't see, as businesses get bigger and bigger, a continual level of 33% ending ARR, 34% subscription revenue. What is your secret, especially now, because in another week it'll be your fifth anniversary?
Well, we're certainly excited about the 50th anniversary of being a public company, but I really think it's not so much a secret, right? We've built a true security platform, and that was the vision when I started the company well over a decade ago. And I think you're seeing the realization of this. You're seeing the fact that we can consolidate many point products. We can save customers money. We can save them time. And more importantly, we can give them the outcome they deserve, which is stopping breaches. That's resonating with customers. They're buying more. 8+ modules, one of the stats that we talked about, attaching to our customer base was up 95%. That's the true definition of a platform company.
Yes. Now, I want to go back to something that you talked about. You put some dollars down here. You said even though every dollar invested on your platform can save a client $6. Can you elaborate how that's possible?
Well, it's possible because when you look at the hodgepodge of point products that a customer has to use, we can eliminate 1, 2, 3, 4, 5, 6, 7 of these and save a tremendous amount of money. And it's not just the acquisition cost of these other products. It's actually the time and money and the people power that are necessary to run them. Then you combine that with our generative AI technology we call Charlotte. We can take 8 hours of work and turn it into 10 minutes of work because Charlotte is doing the heavy lifting on behalf of our customers.
Okay,
and
so
we're seeing a 90% win rate when people actually pilot Charlotte in their environment.
Yeah, see, that's incredible. And the other thing, I guess, is a continual backdrop that you give us. You describe a widespread crisis of confidence among the security and IT teams of your customers, in part because of another Microsoft breach.
Well, this is what we're seeing, and Jim, you and I have talked a bit about this for some time, and that is a crisis in confidence in the install base. And I think one of the areas that we've been very effective in is being able to provide security that customers need without 6 consoles, without the complexity, and just having technology that works, and it works across heterogeneous environments. One of the things that I talked about in my prepared remarks on the earnings call was this concept of a monoculture. Customers are at risk when they are basically buying security from their application security provider and their cloud provider, and you're you're buying legacy technology. So this is resonating with customers. One of the reasons why we created Falcon for Defender, to protect Microsoft customers that are saddled with using Defender technology.
So therefore, you're oddly working with Microsoft. You're not ripping out Microsoft and replacing it. You're just saying, listen, with us, you can feel safer?
Well, we're saying this to customers. We can backstop their technologies on desktops, and obviously it's an entry point for us into a customer account. And overall, leveraging our technology and services like Overwatch, which is our managed detection response service, we've seen a 6x improvement in mean time to detection over our competitors like Microsoft. So it's a win for our customers, and we provide it in a packaging that makes sense for them. And
you also talk about, for the first time, you actually point blank named Broadcom. Now, Broadcom has to be a Chapel Trust holding. I like it because the Hocktan is doing some things that are aggressive that I like in AI. But this is not that part of Broadcom, right? There's a legacy bit of Broadcom that you're able to really go after.
Well, there is, and this is something, as a company, Broadcom has done a great job, and you have to give credit where it's due. But obviously, there's some legacy technologies that's part of their portfolio, and really their customers are coming to us. They're saying, hey, we want something better, we want something more modern, want something that can save them time and money and gives them alternatives. And CrowdStrike is a great alternative with a fantastic outcome.
I think one of the things that, for the people who don't follow actually what exactly Falcon does and what you do, there's a stat that I think that will resonate with them, because I want people to own the stock, and that is your application rate and how it compares to the best colleges we have in this country.
This is an incredible stat, and when I heard it, Jim, I said we have to put it in the earnings call, and that is, the last 5 quarters we had almost 700,000 applicants, and we're so selective that it's actually, we hired several thousand of those, but if you do the math on it, it's actually harder to get a job at CrowdStrike than any Ivy League college. And I think that goes to the quality of the people that we have at CrowdStrike, and the best people are solving the hardest problems for our customers and building the best technology.
At the same time, you do pay homage again to what Jensen's doing at Nvidia. You call them, CrowdStrike is the epicenter of securing the workloads driving the AI revolution. What happens if the bad guys get in control of some of the stuff that we're seeing from Nvidia?
Well, look, you have to give credit to Nvidia and what Jensen's doing. Just amazing, and we want to help him be part of that success. And when you think about these workloads and the proliferation of hardware and pods, I mean, it's just exploding. You follow the hyperscalers and CapEx and what's being bought and how that's being used. You're going to need security to secure all these AI workloads, and this is just another accelerant in the boom for cloud security, which is an area that we play heavily. The bad guys can use Gen AI, and we use it to stop the bad guys.
Well, that's why I'm very sympathetic to Secretary Raimondo when she says, look, we've got to stop the Chinese from getting the latest and the greatest. If they have the latest and the greatest, it's going to be much tougher to stop them, isn't it?
I'll leave that for the politicians. We're going to focus on protecting our customers from the adversaries around the globe, and that includes nation state as well as the proliferation of e-crime, which has just exploded. Ransomware and extortion. It's just an amazing set of challenges that customers have to go through, and we want to use the latest technology with a great partner like Nvidia and leverage AI to solve really, really hard problems.
One last question. It's personal. My office knows we all sit together. I get about maybe a call or two a day from someone who represents a Medicare organization or a Medicaid organization, and they have all my health care. They have everything. They have every operation. They have How is this possible? Who has that information? None of these organizations is real.
This is the challenge that we've seen, Jim, and this is one of the areas that I think maybe is not as well understood. We hear a lot about ransomware. People have gotten a bit better in backing up their data. You've seen some of the other players that help in those areas from a technology perspective, but the bad guys have changed their tactics. They're now resorting to extortionware, where they're actually then extorting companies for this data, or they're leaking it and putting it into the dark web, and then it's being bought and monetized. And what you're seeing is the end user of that monetization, and that's why you're getting those calls.
Well, they do sound great. When they call me and the things they offer, it sounds like the greatest deal in the world, which is therefore something that people should just hang up on immediately. I want to congratulate George Kurtz for still one more never fail, never miss quarter. George Kurtz, co-founder, president, and CEO of CrowdStrike. George, thank you so much for coming on the show.
Thank you, Jim.
CrowdStrike's the winner. What can I say? Mad Money's back after the break.
Coming up, Snowflake shares cooled after their latest report. Could an investor day agenda help the stock plow ahead? Stick with Cramer.
This is a rough time for the enterprise software space as companies reassess how much help they'll need in a world that's about to be transformed by, yes, artificial intelligence. But against this negative backdrop, many of the largest software companies are hosting big user conferences or investor events. Look at Snowflake, which helps companies store, organize, analyze, and use their data. 2 weeks ago, they reported a solid quarter, but gave cautious guidance that sent the stock, I don't know, going lower. But this week, Snowflake held its annual user conference, Snowflake Summit, and last night the company had an investor day meeting as part of the festivities. Unfortunately, it wasn't enough to turn around the stock, given the difficult environment. In fact, it fell almost 2% today. Most of the analysts like what they heard, though, but they didn't seem confident it could move the needle anytime soon. You know what? I want to go directly to the source, though. Let's take a closer look with Sridhar Ramaswamy. He's the CEO of Snowflake, coming off these two events. Mr. Ramaswamy, good to see you back on the show.
Jim, excited to be here. I'm calling in from Moscone Center in San Francisco. We have over 15,000 people here, customers, partners, developers. You can hear the buzz. It's pretty exciting down here.
Now, could you explain to our viewers who don't understand, but I think should, the value proposition of going to your company versus just say, listen, I'm going to go to the hyperscalers, send them a lot of money, and hope things work out?
Well, we are the data platform that works. We create a single, simple platform that enterprises bet all of their data strategy on. We make it super easy for them to clean the data, get it in, get insights, but also increasingly run AI applications on top of the data. We are like the car that comes completely assembled that you can just drive. Yes, you can go to others and get little parts, but people want to be driving the cars and getting value from the data they have.
Well, I think this is great because the initial view I had of Snowflake was you had these people that would go with a discrete short-term piece of business, and then they might actually go away. But if you're putting the data on top of it with analysis, it's more likely that they stick with you. What has been the retention rate since you started this?
Well, our net retention rate, which is how we measure how much increased revenue people are spending, is 128%, which is a pretty remarkable number. And we're acquiring lots of new customers, lots of growth. It's also important to understand, Jim, that in addition to things like analytics, to things like insights, machine learning, AI, we are also increasing the nervous system for the global enterprise because lots of our customers exchange data with all of their partners. That creates stickiness because we are now part of how they pretty much run their business. And not only that, people are writing applications on top of Snowflake, which gives the next level of functionality and strength to the platform. All of these build on themselves to create a long, durable data platform.
Now, we have watched you since you've come in, and you're starting to put your stamp on things, embracing open standards, interoperability with external platforms. I think that you should talk to us about how there really was. I mean, look, I think I think the world of Frank Slootman, but this is very good for you. Worked at Google for years. You know sales. This is and analytics and data. This is something that's going to change the course of your company.
That's right. We talked when we last talked, Jim. I was actually talking about Iceberg and interoperable formats and openness. And I think we hit a pretty big milestone yesterday when we announced support for Iceberg, which is the open format, and said all of our customers could use it. Not only that, we announced a catalog, which is a way to get at tables, called Polaris yesterday. I think this is a big step forward. This also means that Snowflake can now act on 100,000 times more data because it's all the data that's sitting on cloud storage. And it's great for customers because they know that their data is not locked into one vendor. We have world-class, we have the best compute engine that there is. I think this is a massive expansion of our TAM and our market opportunity.
Absolutely. I totally agree with that. Now, we did last night have Databricks on. They do some competition, a private company, though. And they talked about how they bought this tabular, which seems like a pretty good asset. I mean, you were talking about Apache Iceberg. I mean, they've got the good bloodlines for this tabular. Is that something that maybe you would have been interested in, or do you don't think you need it?
We don't need it because we support the open format. It is fully integrated tightly into Snowflake's product. And we've launched a catalog, which is how people get to the data that's sitting on cloud storage. The other companies have bet on formats like Delta. In many ways, this is a 180-degree reversal. and speaks to how much support Iceberg has. All the hyperscalers, AWS, Azure, and AWS and GCP all support Iceberg as well. There is broad-based support for a single format, and Iceberg is that one. And we are really happy that we leaned in heavily to support this format.
Okay, now I need your help. You announced new collaboration with Nvidia. Last year, I remember there was a kind of a fun, wild time between Frank Slootman and Jensen when he was at your conference. But one of the things that I'm confused about is the more I read about this new, about Blackwell, what these computers are doing is actually writing the software for you, maybe writing software better than individuals can do. Do we need all the enterprise software companies we have now if the machines are writing better than we can?
Well, I think machines are helping people write better software than we can. Machines are giving us more insight into information that there is. Part of what we announced yesterday was making it just trivial for people to create chatbots or being able to get insights from their data. That's the value of what we bring to the table. I think we're quite a bit away from a place where, like language models can just write software and not need humans. It's much more an accelerant. It's a positive accelerant because there are a lot of things that are like, humans don't like doing. We don't like writing documentation. We don't like fixing gnarly pipelines. And so there's going to be a lot of gain in efficiency. And this is why we're integrating AI into every level of the Snowflake platform. I think there's a lot of benefit, but I think we are far, far away from the time when AI is just going to do everything that humans are going to do when it comes to code.
Well, what I'd like to do, judging by what you just said, is say to people who say this is going to take a lot of jobs away, is that no, like you do, that it's going to make people more productive, which therefore brings bigger profit, which then means that more people will be hired.
100%. I think you should first and foremost think of this as a productivity boost. You should think of it as a way to do like tedious tasks more accurately. There's also a lot of creative elements to AI. People are developing ad copy on top of Snowflake or generating images that they can use in ads. And soon you're going to see video generation. I think it opens up a lot of possibilities as well. And that's what's exciting about being a data platform. And that's the buzz that you hear from all the developers that are here.
Well, I think that's the way we're going to have to start looking at this. Liberal arts types, of which I know, start listening and stop worrying, because I think this is the way to go. This is Sridhar Ramaswamy coming from his conference, CEO of Snowflake. Thank you for coming on the show.
Thank you, Jim. Always excited to be here.
All right, Mad Money's back after the break. It is time. It's time for the lightning round quiz. That's right. Raffle number 7 stock said buy, sell. So don't do the call. So my staff going to play this out. And then the lightning round is over. Are you ready, Skeet Daddy? Time for the lightning round quiz. Let's start with Nick and Florida. Nick.
Good afternoon, Jim.
Good
Calling
afternoon,
about PNC stock.
I've always liked it. I think it's going to go to all-time high and then go higher. It's the street's favorite stock, and it also yields for it. Let's go to George in California. George.
Booyah, Jimmy.
Booyah.
Energy fuels.
What can I say? Look, this is a momentum stock. I am going to go with GE Vernova because if we are going to have nuclear, they're going to be the winner. Let's go to Justin in New Jersey. Justin.
Hey, Jim. Thanks for having me on.
Thank you.
Hey, first I'd like to shout out the boys from the Discord group and also Howard Linden, the CEO of StockTwitch, who better knows me as Ferrari Fund, and also Roaring Kitty. So let's get into it.
All right. Okay, that's good. I love Reddit. I think Reddit's a good stock. Just throw that in there. Go ahead. What's up?
All righty. The stock I'm here to talk about is Core Scientific, who recently signed a 12-year, $3.5 billion HPC contract to host NVIDIA GPUs via CoreWeave, on top of mining 400-plus Bitcoin per month, second only to Marathon. Where does Cores fit in or compound?
Okay, just to be clear, I happen to like Bitcoin, and I happen to like Ethereum, and I like the ETFs, and that's what I stick by. I want the clarity and the purity. Let's go to Fernando in Virginia. Fernando.
Booyah, Jim.
Booyah.
I started watching your show almost 20 years ago when you debuted in 2005. And I was just a young pup, and you looked the same except thinner.
You're very nice. Thank you.
I know from hearing you on Squawk that you're not a big fan of Intel as a competitor to Nvidia. But what about a long-term investment based on it as a chip manufacturer, including for Nvidia?
It's AMD. That's AMD you're describing, not Intel. Let's go to Tony in Florida. Tony.
Hey, Jim, I just want to thank you for everything you do, and I've been a club member day one.
Yes.
And we'll be a club member for life if you stay as long as you can.
Thank you. How can I help?
Well, the company I have is it's a company that does a lot of digging for AT&T, Verizon and stuff, and in Florida we see it all. It's Maztec, MTZ. Do you think
that's a great infrastructure play, and it's coming back. I was so afraid when it went down after a not great quarter that people would say it's down and out. No, that is a very good company. Jose Mas is doing a terrific job. We like MTZ. Let's go to Randall in Illinois. Randall.
Hey, best wishes to you, Jim. I'm calling about Workday. I have a family member that works for Workday. I've owned it for about 6 years, but it's been under pressure lately. Can you tell me why it's under so much pressure?
It's under pressure, I think, because that's a part of enterprise software that is just simply not working right now. We're going to have to see another quarter before we can get behind Workday. And that, ladies and gentlemen, is the conclusion of the Lightning Round.
The Lightning Round is sponsored by Charles Schwab. Coming up, gold, crypto, and an SEC that's trying to keep up. Just don't flip a coin. Stick with Cramer.
Polkadot, Cordana, Cosmos, Immutable, Ronin, Bonk, Osmosis, Sushi Swap, My Neighbor Alice have all traded millions. I'm talking about millions of dollars this very morning. Now, should we have a Sushi Swap with maybe an ETF or the proprietary kind? Just I would think that Bonk is a natural, and Osmosis. These are trading Gary, these are millions of dollars. These things are traded. Shouldn't we have it? Shouldn't we have some sort of product? That Sushi Swap makes me kind of hungry. Anyway, that's me trying to grill SEC Chairman Gary Gensler this morning about all these ridiculous crypto coins that trade millions of dollars a day that may actually be worthless. I wanted him to condemn the so-called process because it doesn't seem like there is one. But he did something better. He told us that he can't protect people buying these things. Like the beginning of Blood Simple. Down here, you're on your own. And that's right. If you're trading crypto, you're on your own. And look, I say this as someone who's sympathetic to crypto. In a world where one of the biggest bills our government faces is debt service, believe me, I absolutely want to diversify into something that might be a better storeholder value than the U.S. dollar. I really like Ethereum and the fact that it's used in real commerce, even as it's time-consuming to actually buy some. I'm gratified that there's an equivalent of an ETF for Bitcoin and one just approved for Ethereum. These big-name cryptocurrencies have been very rewarding investments, and I do prefer that you do them with these ETFs. But it's time to clean up the rogue coins. They make a mockery of the process, tarnish the legitimate parts of the crypto ecosystem. There are tons of coins that are downright worthless, like the coin named for me, which I have no affiliation with, backed by the full faith and credit of who knows what. I wish those would just be taken down. We know the SEC tried hard to police, tried to at least figure out a way to police crypto. Some say they've been heavy-handed, but I think those companies that traffic in the crypto wheat should burn the crypto chaff. They need to make it clear that they're policing themselves, not pushing garbage purely to make money. Right now, the system is a mess, if you can even call it a system. We don't know what's legal and what's not. We don't know who's committing fraud and who isn't. We don't know who to turn to because the SEC, which normally goes after rogue securities, doesn't regulate cryptocurrencies. The FTC seems to regulate them. Congress is the ultimate arbiter, but they seem reluctant to make things clearer with actual legislation. And this weird mosaic makes what should be totally legitimate crypto coins into these pieces of data that are indistinguishable from each other, even if it's obvious that some that we follow have no reason for being. As long as Uncle Sam's going to run gigantic budget deficits, there'll be huge demand for alternative store holds value, and gold alone is not enough. You know, I love gold. It's a great inflation insurance, something I learned when I worked at Goldman Sachs with Gary Gensler many moons ago. A lot of my clients wanted a hedge from paper money and a hedge from the world. That was gold. Now, I still do like gold. It's still hard to find. We discover less each year than we put away, so it's going to keep its value. But gold doesn't have, the luster it used to have, and it's become increasingly expensive to extract. Its recent run is surprisingly muted given what happened to inflation, and it did nothing when things were really raging. That's why I think there's a place for Bitcoin or Ethereum in your portfolio. I just wish the bogus cryptocurrencies would get outed by the regulators. I think they way too much money is being made by these crypto exchanges, way too much, that somehow seem to believe that they're allowed to self-police. Believe me when I say that ultimately, it will be their loss and not ours. Like I said, there's always a bull market somewhere. I promise to try to find it just for you right here on Mad Money. I'm Jim Cramer. See you tomorrow. Last call starts now.
All opinions expressed by Jim Cramer on this podcast are solely Cramer's opinions and do not reflect the opinions of CNBC, NBC Universal, or their parent company or affiliates, and may have been previously disseminated by Cramer on television, radio, internet, or another medium. You should not treat any opinion expressed by Jim Cramer as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of his opinion. Cramer's opinions are based upon information he considers reliable, but neither CNBC nor its affiliates and or subsidiaries warrant its completeness or accuracy, and it should not be relied upon as such. To view the full Mad Money disclaimer, please visit cnbc.com/Mad Money disclaimer.